What's up, you all? This is your coach Manoj at optionpundit.com, and we have all seen how the markets have been behaving in the recent few weeks. So I thought, I would record a quick short video tutorial for you and also share some profitable opportunities for you to benefit from where the markets ended on last Friday. And I'm going to review about 5 or 6 index, which includes the US market indices, Hong Kong market indices, as well as Indian market indices as well. So take a paper and pen, make sure that you watch it continuously, make sure you don't miss out anything, and note down the key levels where there might be some trading opportunities for you to profit handsomely. And this video is valid as of now only, but once the market open, all these levels will change and all the projections will change. So if you are watching it after the markets have opened on Monday, then I would say that this video may not be of that much of usage. So let's quickly get started. This is Dow Jones, what you see on my chart right now. And as you can see that from the high to the low currently, Dow Jones have dropped almost 2,732 points, which, put it another way, it's down approximately 4.5% in a week and about 5.7% year to date in Jan alone itself. That's 2022 Jan alone, and the Jan is not completed yet as well. But we do see some opportunities, and those opportunities, if I were to really draw, my opportunities will be here. I'm going to use this chart to plot some levels where you might find some levels that you may want to look at, and those levels will be here. If I were to really draw a line on this chart, and you will notice that we do have like some level of support. Okay, once again, just drawing the line here. So we do have some level of support at this point, and then you can say that there is another zone here at around 33 or 34,000. So give and take about 200 points roughly on Dow Jones. That's where I think we should find some level of support. What you see on chart, the chart is not really very constructive from a chart point of view because it has dropped below 200-day moving average and also closed below 200-day moving average. And do keep in mind, in this week we have FOMC announcement as well, so that might either trigger further downfall or may just serve as a support level. And once Fed provides a clarity, then we may see a good bounce there. The next index that I'm looking at is the Dow Jones Transport, and if you look at it, the Dow Jones Transport, after this gap up for whatever unique that might be, or maybe just an error there, it is sitting right there at 200-day moving average, and actually it closed on Friday below 200-day moving average. So I'm not so excited about the Dow Jones Transport per se, because if I were to look for some trades, I will look for those trades in Dow Jones Industrial or maybe in SPX and NDX. So the thing to look at quickly on SPX, you will find that SPX is also down approximately 5.6% just last week alone. Like almost every single day, 1% point going downwards, 100 basis points. That's a lot. And this year alone, SPX is down about 7.8%. So it has broken the 200-day moving average as well. It has also broken, if you look at the trend line, you will find that it has actually broken this trend line as well, which was right there on this chart. It has also broken the short, or rather, let's call it 50-day moving average line. That's also broken. So once again, from a chart overall perspective, is not very constructive, but what you should look at is that there is actually a ray of hope, and the ray of hope will be somewhere around here. If I were to draw that line, and another one will be somewhere around here. So approximately around 4,340 roughly 4,350 is a point to watch out on SPX, and I would be willing to take a bullish spread. If you know how to trade options, then I'm looking for opening a bullish credit spread there. Nasdaq is in a worse situation right now. If you look at Nasdaq, you will find currently it's 14,438. and it has broken 50-day moving average, it's broken 200-day moving average, but it's very close to another major support area, which happens to be around 14,400. So once again, give and take around 50 to 75 points. I think this is also, or maybe 100 points, and I think this is in a zone where a profitable opportunity might emerge. And if it further goes down, then I would say approximately 14,000 should serve as a great point to enter. But once again, keep FOMC in mind. If the expectations are already built in, already factored into the markets though. But if Fed disappoints, then the NDX will be in the most vulnerable situation. Now, if you look at RUT, you'll find RUT did not actually go anywhere in last 1 year, and it's just been moving sideways since then. And it has broken 50-day moving average, it has broken 200-day moving average, and now it has also broken some of the major supports which were around 2000 points. So unless it really reclaims 2000 and goes higher, I'll be very, very cautious about RUT as well. Now, one of the things which I highlighted at the beginning of this year was Hong Kong index, and I called out at that point of time that Hong Kong index is going to offer us great returns, especially as we get into 2022. And the reason for that was that it was down approximately 27% in last year itself. So we did see some sort of a double bottom here. And if you are an option pundit graduate, you know the W patterns and M patterns if you learn, and you've been watching me on several lives. I'm not going to explain that right now because I want to keep it as short as possible. So the Hang Seng Index has been on a tear. It's been really going fantastic. And if you see and you look at it, it has actually gone up from this point onwards all the way up, approximately 10% up already. But don't get too excited, because 26,000 is going to serve more or less like a resistance. And once that is cleared, only then we would say yes, it's in a new territory. But as of now, it's already up, and then maybe another 1,000 points roughly on Nifty may be available. But the key and the index that I'm keenly watching is India's Nifty. And India's Nifty actually couldn't make a new high, and it's been going down. Right now it's sitting at 50-day moving average. So if you look at that, it's around 50-day moving average. But if you were to measure from a previous point to the low, then that low coincides roughly around with the 200-day moving average as well, which is approximately 2,200 points all the way down, which means 16,500 plus minus will be an area to watch out on Nifty. Currently it's around 17,617, which means that if it were to pull back, there might be a pullback of another 1,000 points on Nifty. So if you are building up some trades, and if you're looking at it, write down these levels and see what sort of trades you can open. And if you were to seek my opinion, I would say the best will be you wait for some solid supports to emerge and let the uptick begin before you get into the trade. So yes, we are watching those weakness, but you do not want to enter just in the weakness. You want to enter when there is a strength emerging from that weakness. And this week might be the week when we might see some strength emerging into the markets. Once again, this is Coach Manoj, and if you have not subscribed to our channel, make sure that you hit the bell icon, you hit the subscribe button, and stay with us so we can send you we can send a notification once the videos are published. And I hope you enjoyed. If you enjoyed this video, make some comment. If you have any question, feel free to write those comments as well. I look forward to seeing you in the next video. It was quick, sharp, short video, and I hope you learn a lot from that as well, and how to quickly review the markets and develop your own outlook. So once again, this is Coach Manoj. Wish you all the best. Stay safe, stay healthy. See ya.